All right, let's talk about something really important. If you live in Georgia and you're thinking about the future, one of the biggest, scariest questions is how in the world you're going to handle the cost of nursing home care. So in this explainer, we're going to break down 7 key ways to do it, from government help to private plans, so you can protect your family and everything you've worked for. Let's dive in.
So let's just get right to it. The number you really need to have in your head is this: over $100,000. That's the average cost for just 1 year of nursing home care here in Georgia. And believe me, it's only going up. Now that number can feel like a punch to the gut, but just knowing what you're up against is the first step to making a smart plan.
And this right here is why we're talking about it. Without a plan, a lifetime of hard work and saving can be completely gone in just a few months. Seriously, this isn't just some number on a spreadsheet. This is about preventing your entire financial legacy from getting wiped out by one single massive expense.
So yeah, that's what we're calling it, the $100,000 Georgia problem. How do you deal with a 6-figure expense year after year without destroying your retirement? The good news is a problem this big has more than one solution, and we're about to walk through them.
Okay, so where do we start? Well, our first 3 strategies dive into government-funded programs. These are usually the first thing people think of, but it is absolutely critical to understand that each one of these programs does something completely different. Here they are, the big 3, side by side. You've got Medicaid, which is our first strategy, covering long-term care but with really strict financial limits. Then there's Medicare, our second strategy, which is only for short-term rehab. And finally, VA benefits, our third, which is a cash pension for veterans. They are not interchangeable, and knowing which one is which is a huge deal.
Okay, let's zoom in on strategy number 1, Medicaid. Now, for 2025 in Georgia, it pays for 100% of the nursing home bill. Sounds amazing, right? But here's the catch. You have to meet these incredibly strict financial limits. For a single person, we're talking less than about $2,900 a month in income and just $2,000 in assets. I mean, $2,000, that's basically nothing for someone who's saved their entire life.
The trade-offs here are pretty stark. The pro is massive, 100% coverage, no monthly bills. But the cons, man, they're big. You have to spend down, basically get rid of, your life savings to qualify. And even after you're gone, the state can come back and try to claw back money from your estate. That's called estate recovery.
So who is this really for then? Well, it's a lifeline for people with lower incomes for sure. It's also a really important tool for married couples when one person needs care, because there are rules to protect the spouse who's still at home. And, it's also for the folks who are savvy enough to plan ahead, using legal tools like trusts to meet those tough rules.
Now, for our second government strategy, and folks, this is the one everyone seems to get wrong, Medicare. A lot of people just assume it'll cover the nursing home. It absolutely does not cover long-term care. Medicare is only for short-term skilled rehab, and only after you've been admitted to a hospital for at least 3 days. Think of it like a clock that starts ticking the moment you enter that facility. For the first 20 days, you're good. It's 100% covered. But then from day 21 all the way to day 100, you get hit with a daily copay of over $200. And on day 101, the clock stops, and you are on your own, paying every single penny.
The takeaway here is simple. Medicare is for getting better, not for staying there. It's designed for someone who had surgery or an illness and is expected to get well and go home. It is not, and I repeat, not a solution for long-term conditions like dementia or Parkinson's. Our third government strategy is a really important one, and it's specifically for our veterans. It's called VA Aid and Attendance, and it's a monthly cash pension for wartime vets or their surviving spouses. And as you can see, for 2025, that can be over $2,700 a month for a married veteran. That's real money that can make a huge difference.
Okay, we've covered the government options. Now, what if you're going it alone? Well, our fourth strategy is the most direct one, just paying for it right out of your own pocket. This is called private pay.
And if you're going the private pay route, this is the number you need to brace for. In Georgia, the average cost for a private room is about $8,600 a month. Just let that sink in for a second. Every single month. That's a relentless drain on your savings.
So it really forces you to ask a tough question, right? Think about your own retirement accounts, your 401k, your nest egg. At more than $8,000 a month, how long would it really last? For most of us, the answer is not very long at all.
So let's be real. Who can actually do this without going broke? Generally, it's for people with over $1 million in liquid, easy-to-access savings, or maybe for someone who only needs care for a very short time.
The big upside, of course, is that if you can afford it, you have total freedom to choose any facility you want, no questions asked.
Okay, this brings us to our last 3 strategies, and these are all about being proactive. These are the tools you use to protect your assets before you're in a crisis.
Our 5th strategy is a classic, long-term care insurance. So how does this thing actually work? Well, think of it in 3 steps. First, there's a deductible period, called an elimination period, that you pay for yourself. Then, the policy kicks in and starts paying a set amount of money per day. And finally, it pays for a set length of time, like 3 years. Basically, you're being an insurance company to take on that giant financial risk for you.
The real trick with this strategy is timing. There's a sweet spot, and it's usually when you're in your 50s or early 60s. Why? Because you're probably still healthy enough to get approved, and the premiums, will be way more affordable. It's a fantastic tool for people who want to make sure their nest egg stays intact.
All right, our 6th strategy is a little more advanced, but it's an incredibly powerful tool. It's called a Medicaid-compliant annuity. In simple terms, this is a special financial product that lets you legally turn assets that would disqualify you from Medicaid into an income stream that doesn't count against you. It's a strategy to help you qualify for those benefits much, much faster.
And for our 7th and final strategy, let's look at a few other creative options. You might be able to convert the cash value from a life insurance policy into a special fund for care. Or you could use an annuity with something called a lifetime income rider. There are even hybrid policies that will pay for care if you need it, but if you don't, they'll leave a death benefit for your family.
So we've walked through 7 different ways to tackle this problem, from government aid to private insurance, and they all point to the same undeniable conclusion. The absolute worst thing you can do is nothing. Waiting until there's a health crisis is just too late.
This really says it all, doesn't it? When you're facing costs this high, planning for nursing home care in Georgia isn't just a good idea, it's not optional. It is an absolute necessity if you want to protect your spouse, your kids, and everything you've worked for.
And that leaves us with one final thought. Every single strategy we've talked about requires you to take action before you need the care. Your plan for a secure future for tomorrow has to start today. So the only question left is, are you prepared? Thank you for joining this explainer.